Hello, everyone. My name is Monica Harper. I'm the Executive Director of AACFB, and I'm pleased to welcome you to today's webinar, Mastering TValue Online to Win More Deals. Please note that today's webinar is being recorded, so all participant lines will be muted during the broadcast. However, you can submit a question at any time during today's presentation using the Q&A box, and they will be answered by the end of the webinar. Please reserve the chat for communication between attendees, so your questions are easily identified by the presenter in the Q&A box. If you have a question and would like to ask your question verbally, please click the raise your hand feature and you will be unmuted to speak. Our presenter today is Greg Smith. Greg is a senior member of the TValue software. Since 1984, TValue software has developed finance and tax software applications used by more than 500,000 end users worldwide. Greg is a software sales and product trainer of time value of money calculations, focused on helping financial professionals in the accounting, banking, and equipment finance industries. Greg, I want to thank you for sharing your experience with our members today. It is all yours.
Boy, thank you for the kind introduction, Monica. So I don't need to tell you much about myself. So Monica did that for me, but little background, I've been with TValue for about 25 years. And I have some extensive background in working with our customers in the equipment finance space, including equipment brokers, users and customers on the funding source side, as well as vendors and equipment manufacturers that use our TValue Online product. We have partnered up with the AACFB, that's the American Association of Commercial Finance Brokers, and they had reached out to us and asked us to put together this training session for you. So we jumped on this opportunity, and in our partnership, we've actually put together a discount for members. So if you join the AACFB, you can end up purchasing our TValue Online at a 40% discount for the first year. So you can you have Monica to thank for that, as well as the board of directors that worked hard to put this training together for you. Another thing that I noticed that the AACFB offers is they have a mentorship program. So for those of you that are new to the industry, highly recommend joining their association and really getting on board with a mentor. These mentors have volunteered their time to help you. So I really want to encourage you to take advantage of that opportunity. Why reinvent the wheel when you have someone else who can lead the way? So before we get started, I have Monica's going to send you a poll question, and I'll give her a moment here. We'll give you a little bit of time to respond. And the question, if you don't see it there in your chat screen there, is: do you currently use TValue, or have you used it in the past? If you could answer that yes or no. And we'll just allow for a little moment of silence here to get our responses in.
It looks like about 87% have used it or are currently using it, and about 13% have not used it.
We lost you a little bit, Monica. You said about 50-50?
No, actually about 86% have used it or they're currently using it, and about 15% are never used it.
Okay, great. Thank you for that information. So that's very helpful. And thank you for all you customers who are using our product. We're been around for a long time, so we really appreciate your business and loyalty, and hope we can make this training session useful and helpful for you. So today we're going to be promoting and training on our TValue Online product. Many of you have probably used our desktop version or are currently using the desktop version. So our session today is only going to be for TValue Online, which is our cloud-based product. And the first thing that we can do is just kind of show you how you would log into our website. So here's our slide on this, and we'll make sure that everyone receives these slides afterward. Afterwards, the presentation is being recorded, and we'll also open it up to Q&A and get to as many questions as possible at the end. So as we move or log into the product, we're going to go ahead and do that by going to the website tvalueonline.com. So in the top left, if you just type tvalueonline.com, this is your sign-in screen. You simply enter in your email, your password, and click sign in. And for those of you that have used our product, I'm sure this screen looks very, very familiar to you. This is kind of what we consider our home screen. This is where you typically enter in all of your calculations. And if you're analyzing particular deals, this is where you would manipulate the calculation and kind of do your what if scenarios. So the first thing that we can do is kind of get started by how to customize our event names. I want to spend a little time here on how to turn off the settings within TValue. We're used in a lot of different industries. We're used a lot by accountants and CPAs, banks, credit analysts, financial planners, attorneys. So we're going to turn off some features and dummy down the product so you're only using the features that you need, so there's less confusion. So this might be helpful for those that have been longtime users because you may not have known how to do some of these things. We're going to do this by clicking on event names, which would normally display up on the toolbar or under the section more. So we simply click more and we select event names. Okay. And then under event names, there's a bunch of groups over to the left. And these groups, we have loans and payments, deposits and withdrawals. Neither of those are applicable. Lease and lease payments, which we'll be using, investments and returns. We are going to be turning off some of these features. The way we do that is we simply uncheck the checkbox there that says include an event list. So that's going to remove it. And then we'll click on the next option, deposit and withdrawals. We're going to remove that one. And since we're going to be using leases and lease events, we want to make sure that one is checked so it appears as an option. So we have all of these event names listed over to the right as options for our cash flow entries. Then we're going to go ahead and click on events and returns. We're going to turn these off. Once you do that, there's two buttons in the middle. Make sure you don't hit save. We want to hit save for new documents. So we have these settings for all future schedules. So we'll go ahead and click on that. The next thing we would want to do to kind of set up the program is change our default settings for our event names. And the way we do that is we're going to click on input setup. And under the default event, it will typically say loan. We already have changed it previous and saved the setting. We want it, if it says loan or anything other than equipment cost, which is our terminology, you want to make sure that you make that your default. The second thing that you want to do is you want to change the cash flow line. So since we'll always have a commission on the same date of your funding, we're going to change it from one period after to the same date as the first cash flow line. So select that setting and we want to do save as default, gray button in the middle for future schedules. Okay, just kind of going back to the event names. One thing I do want to specify, when I click here on lease and lease payments, these event names over to the right are my terminology. You want to use the terminology that works for you, or if these are customer facing or funding facing, use the terminology that works for you guys. So for us, instead of lease, we changed it to equipment cost. We left it as commission, so we know what that is. Refund a deposit for refunding a security deposit. Over to the right on the other side of the ledger, we have our lease payments, a security deposit if there is one, and residual payments. So just remember, This is the terminology I chose. You get to choose what works for you. So I'm going to go ahead and cancel out of this screen here. And before we kind of get into our examples today, one thing I would like to share with you that would be a really, really good takeaway for you, and you're going to need this as you're funding deals, are the 3 C's for credit. And the 3 C's for credit are character. So character would be how well your customer makes their payments on time. So are they making them, and are they making them consistently? Cash flow, do they have the cash flow to do the deal? So this is what your funding sources are going to be scrutinizing as you send the deal over to them. Collateral, is there collateral involved for the deal? So 3 C's for credit, great takeaway for today: character, cash flow, and collateral. A couple things to remember. We're going to go ahead and transition into our first example. And our first example, we're going to go ahead, let me pull that up here on the PowerPoint. Give me just one moment as I get that slide up. And here's our first example for today. We're going to be simply be calculating payments in arrears. For today, I kept everything very congruent and the same for all of the examples. Obviously, you can change your buy rate and equipment cost and points on these deals. For examples today, we're going to keep them the same. Your buy rate is going to be provided by your funding source. So for this example, we're going to have a 5% buy rate. Then we have our equipment cost. So whatever they're funding, they might have other things that they're funding, but whatever the total amount is on the invoice that they're going to be funding, would be that dollar amount. We're identifying that today as equipment cost. Points. Your funding source is going to kind of provide the points for you. There's going to be many factors when it comes to the points: the type of equipment, how much the deal will be funded for. Is it up to 50,000? Is it 100,000? Is it 500,000? The funding sources will probably provide you with different points based on the deal. Also, the term will impact how many points the funding source will allow you to have. They're going to usually cap these. So if you had a 36-month, a 48-month, or a 5-year, 60-month term, the points might be a little different. We're going to be using 5 years for all of our examples today. So we'll go ahead and hop into TValue Online, and we'll walk through our first example. Our compound period will always be monthly in each of these examples. Typically, you're going to be doing deals where you're working with monthly cash flows. If you do some ag stuff, I know a lot of ag goes to annual payments, so there's annual in there. And if you get into some quarterly and semi-annual, those are options as well. Most deals we're going to be doing monthly. So we'll leave that as our compound period. And we'll hit enter. I'm simply hitting enter, or you can take your mouse to click into each of these fields. I like using enter or tab. So I am now in the nominal annual rate field, and we're going to go ahead and enter in our buy rate from the funding source. For this example, 5%. This label field, I'll go over this briefly, is basically it's going to be label the particular deal. So we could call this, we could call it dump truck. Or you could call it your customer's name, whatever you use to identify with this particular deal. Then go ahead and hit enter. And if we click on the event name, you're going to see all of our options, which we basically customized from the outset, and we removed everything but the ones we need. So these are the only ones we're going to be working with. Creates less confusion for you. So we're going to select equipment cost, And for all of our transactions today, we're using good old April Fool's Day. So we're going to use the 1st of April. So April 1, 2021. And then the amount of this deal is going to be 50,000. And then the numbers, how many of that particular event are we going to have? So we're only going to be doing one equipment deal. So we're going to have one equipment deal for 50,000. We leave that as 1. We hit enter. And as you can see, when we hit enter, the date defaulted to the same date. So that's the setting we established. That's what we want happening here. This is where we're going to enter in our commission. So we're going to click the drop down, select commission. Then we're going to tab over to the amount. And in this case, we did 4 points. So 4 points would be $2,000. TValue Online does not have a way to calculate your points for you. So you can't. So basically do it by memory or break out your little calculator. So $2,000 is 4% of the equipment cost of 50,000. So that's what that represents. Number will be 1. We simply are hitting enter to advance through the fields. Now we're going to calculate our payments in arrears. If you really want to pay attention as you're entering in the calculation to TValue, the timing of the cash flow. What's happening? When is it happening? So what happens next after the commission? They start making their payments. When do they start? April 1. And then we're going to hit enter, and we're going to navigate over to our amount field. And then we're going to put U for unknown, and we're going to go ahead and end up solving for that. So when we calculate for a value in TValue, it's the power of the U, the unknown. And then we're going to enter in the number. So how many lease payments? Remember, the number is how many of that particular event. These are lease payments, starting on May 1st. And there are going to be 60 of them. That's your 5 years. We're going to simply calculate the payment by going up to the toolbar and hit the equal sign. And now we have our payment, $981.30. Now you're going, well, where's my schedule? What do I do from here? So we're going to view the schedule by clicking the button on the top left, amortization. And if you notice, each of the columns has a header. So we know our equipment cost is spelled out, our commission. We have our lease payments, which TValue calculated, $981.30. The interest and principal breakdown of those payments, and the balance declining every month. We have annual totals in bold there. And then if we scroll all the way down to the bottom, for the entire 5-year deal, we have the grand totals. So you got 5,000, your 2,000 in commission, total of payments, total of interest, and your total of principal, all broken out there, nice and clean. To print a schedule, you would typically just hit the print ready PDF. We're not going to do this today. You simply hit that button, sends it to the printer. Newer feature for those who have not used TValue Online, you can email this schedule as a PDF. You simply click on this button, and you could go ahead and will launch your email. And if you're going to send this to a funding source, you could type in your funding source there, shoot the schedule over to them. Many of the funding sources out there, well, maybe I shouldn't say many, some of the funding sources out there do like seeing your calculations in TValue, since it is kind of the standard versus a scratch piece of paper or Excel where you can simply type in a number.
Hey, Greg.
Yes.
We've gotten a couple of comments. One of them says under lease payments, example 1, you're saying April 1st, but the field says May 1st. And then the other one says the first and last payments are due April 1st. So I think there may be an issue with the dates.
Okay, so these are great questions, and let's clarify the example. So the example is calculate payments in arrears. So the first thing that happens, we have our equipment cost up at the top. From the outset, we're going to have our commission, which is the same day. Arrears is 1 month later. That's why that date differs. If we were doing in advance, we're actually jumping forward here, will be one of our next examples. That will have a payment in advance. That would end up being April 1 as we will get to that. But since this is arrears, it's 1 month later. So that should answer that question. There's kind of two questions there, Monica. I got the one in arrears. Was there another second question so I can address that one?
I think the one said under lease payments, example 1, you said April 1st, but the field says May 1st. And then the other one says.
Yes. So the lease payment should be May 1st. So if I did say April 1st, it should be in arrears, should be May 1st as represented on the screen.
Okay. And it
Great,
says
great
the
question.
first and last month's payments are due April 1st.
No.
Okay.
Good question. There is no first and last in this example. Okay. So we have the equipment cost entered on day 1, commission on day 1, payments start in arrears 1 month later. We solve for their payments. There's going to be 60 of them. They end 5 years later. Starts 4/1/21. 5 years later is 4/1/2026. So let's save that second question because we're going to answer that in another example. Great question.
Okay. And this one other person wanted to know the password again, I guess.
Oh, so that's another good question. I'm glad. So that was for, this is not for you guys to log in today. This is not a live presentation where you guys are logging in and using the software with us. We just showed that. So if you purchase your subscription, you know how to sign into the product simply using your email address and a personal password that you will end up setting up yourself. So if you purchase the product, you will end up setting up an account. Your login will be your email and your own personal password. Good question. Okay, so moving on to example number 2. So we're going to calculate payments in arrears with a residual. So again, we're going to keep our buy rate the same at 5%. Equipment costs, we're doing the same dump truck, the same piece of equipment, $50,000. It's going to be 4 points on the deal, same term, 5 years, and a residual this time of 10%. We'll go ahead and let me go ahead and move on into TValue Online here. Way you can start a new file in TValue, just click on File, New. And we don't necessarily need to save this calculation that we had just done. We'll just do Don't Save. Now we have a blank screen on our home screen here, blank slate. So we'll use monthly as the default, and you can click in the field there. We're going to enter in our buy rate of 5%. And then click in the drop down there on the event, and we're selecting equipment cost. That's always the default there. And we're doing April 1st for all of our examples today. Amount, we're using the same equipment cost, $50,000. One piece of equipment for $50,000. We're going to hit enter. Remember, what happens next? We want to put our commission in the deal. We always have to make sure our commission is the same date as the first event up above. So if you call it something other than equipment cost, if you call it a lease or a loan or EFA, equipment finance agreement, whatever you end up calling that invoice amount, you want them to be the same date, okay? And then our commission in this case is 4 points. So we're putting in 2,000 and only one commission. Then we're going to hit enter. And then we're going to do our lease payments. So this example is in arrears. This time I think I'll get it right, which would be May 1st, 1 month later. And we're going to solve for this payment. It's going to be U for unknown. And our term is 5 years. So in TValue, that's represented by 60 months. Again, if it were 4 years, it would be 48 months in that field. If it were 3 years, it would be 36. In this case, we're just going to keep it as 60 for all examples. Go ahead and hit enter. What happens next? We have a residual at the end. We click on the drop down, select residual. Okay. You notice T-value defaults to 1 month later because we have monthly compounding up at the top. However, when you have a residual, you want the residual to come due the same date of the last payment, kind of at the least end. So we want to back up that date to April 1st. And then our 10%, we don't have a way to calculate this in T-value, but 10% of 50,000 is 5,000. Okay. And we're going to simply go ahead and calculate the payment. And this time we get a payment of $907.78. And you can take a look at the schedule here. Scroll up, there we go. And everything here is the same, except we have an extra column right there where it says residual. And if you ended up scrolling down, you would see the 5,000 at the bottom. Okay. And again, if just kind of remember here, this payment is $907.78. Let's kind of jump back into our slides here. And I'm going to show you the difference when you have the residual. So in this example, we had $907.78. And for the first example, we had clicked it too many times. You had $981.30. So because you have that back end residual of 10,000, it lowered the monthly payment by about 70 bucks. Okay, so that when you're structuring these deals, keep that in mind because you can get very, very creative. So I wanted to show you that little kind of different structure here, or residuals could be common for some of you out there. So this would be the way in which you would do that. So before we move to our next example, I'd like to kind of just touch on a couple of things that would be another great takeaway for you. Your funding sources are going to be needing these 3 things to fund a deal. I kind of like to call them the 3 I's for funding. So I'm trying to make these the 3 C's for credit. And now we have the 3 I's for funding. They're going to look at the invoice. There's going to need to be an inspection, and there's going to need to be insurance. So when you're doing a deal with your funding sources, these are the 3 of the typical things that you're going to need to check off your list and going to be needed by your funding source. So when you're submitting the deal, they're going to be scrutinizing the character, cash flow, and collateral of your customer. And then when you're looking to go in and get approved for funding, they're going to need that invoice inspection and insurance. So you want to make sure you have your ducks in a row, organized, so you're not wasting time for your funding sources. You're going to be an extension of them, and they're going to want to get you those quick, fast turnarounds and approvals, and you want to get those answers yes to your customers. We can do this deal for you. So we're going to go ahead and move to our next example. In this particular example, we're going to calculate our payments in advance with a residual. So this kind of goes back to that first question we had on that first example. Here, we're going to do payments in advance. So first 2 were payments in arrears. Again, we're going to kind of use the same structure or same buy rate of 5%, same equipment cost, 50,000, same number of points, 4 upfront. This time we're going to do 2 payments up front. So this is kind of be first and last up front. And then we have our term of 5 years and a residual. So go ahead and I'm going to move over to our TValue Online product. And we'll move to the next example. So you go File, New. We don't need to save this one. And again, clean slate for our next calculation. So for this one, again, we're going to have 5% for our buy rate. And we're going to enter in our equipment cost starting April 1st, 50,000. And then we're going to enter in our commission. So line 2 will always be your commission. Always on the same date. We're doing 4 points, so 4 points is $2,000. And then we are going to go ahead and enter in the lease payments. Our lease payments are going to be in advance. So TValue defaults to 1 month later. So you got to pay attention to this because you want to go commission. You go, what happens next? They make payments. When do they make their payments? They're in advance. So they're starting on April 1. So you change it from May 1 to April 1. And we're going to represent first and last in TValue by entering 2x. So that's 2 payments of X. So X we're going to solve for. 2 represents 2 payments. We're only going to have 1 of those. And then the remaining payments start when? The following month, which is what we want. And we're going to solve for it. How do we solve? We type the letter U to make it the unknown value. And then we're going to go ahead, and our term was 5 years. A lot of our newbies would put 60 here. But when you go ahead and put 60, that shows 5 years, but now they're making 62 payments. This is incorrect. So what you really want to do is if you have a 5-year term and you have first and last in advance, it's how many remaining payments. So it's 60 months less the 2, how many remaining is 58. Okay. And then we're going to go ahead and enter then that 10% residual. And so we're going to click that in the drop down. And we're going to go ahead and make sure that the date is the same as the end date. So on line 4, your final payments are on February 1. Our residual is going to be due February 1. Okay. The amount is 10%, so 5,000. Calculate. Okay, you're going to notice that the payments are different. Why? Because 1 is double the payment because you have first and last in advance. So $1799.44 is 2 times of $899.72. We're going to go ahead and click on our amortization. Scroll up to the top, and we have all of our columns again. Equipment cost, commission. Let's look at the schedule there. See where you have first in advance on the same date. So the interest column will always be 0 in this scenario. And then you're basically kind of paying down principal. So that's kind of what that looks like. Don't get nervous when you see that 0 in the interest because no time has accrued because it acts as a down payment is what that's acting as. Okay. Okay. Go back to our cash flow screen. And we're going to move on to our next example. Any questions, Monica? Are we doing okay there?
We had someone says I can't get my event name to save.
Okay, that didn't come through clearly. Can't get my event name to
save.
Oh, you know what? Great question. Let's come back to that one at the end. If you can just put a little asterisk by that one, I'll write a note here how to get event names to save, and we'll want to address that and make sure that we can get those saved.
Okay, I have someone else says, how do you get the points to show up in the list because they're using TValue right now and they can't see it?
Ah, good question. The points do not show up. So there's nothing in TValue that says enter in your points. So the concept of points is it's always a percentage of your equipment cost. Okay. So if in this example, if you're looking at the slide here, our equipment cost is $50,000. 4 points of that, so 4%. Okay, so points are also calculated as a percentage of the equipment cost. So it's basically saying points is 4% of the equipment cost. So we're literally you have to use your calculator. What's 4% of 50,000? It's $2,000. If your equipment cost was 100,000, what's 4% of 100,000? 4,000. Okay. There's not a way to enter. There's not a field in TValue Online where you enter points. You enter it in as a dollar amount. Okay. So I'll kind of specify that again as we go into the next example to kind of emphasize that for you. That's a good question. So I'm going to go ahead and move on to the next example. And in this one, we have calculating seasonal payments. So for any of you that are financing equipment in the seasonal business, agriculture is a great example. Golf courses are a great example. You could be those are really some key ones. So let me go ahead and we walk through this calculation in these seasonal payments. We're going to do it with what kind of the industry refers to as a contact payment. So we're going to skip certain months. This is also known as a skip payment loan or skip payment lease. So skip payments with contact payments. So right from the top, our buy rate's 5%, our equipment cost 50,000 points. Maybe I should have entered this in. The reason I put points here is because that's what your funding source is going to tell you. He's not going to tell you that you can do this deal for $2,000. He's going to say you can have, up to 6 points, and you might determine, okay, I'm going to put 4 points into this deal. Okay. Term 60 months. This time we're only going to do one upfront payment. So I do want to show you how to do one upfront versus two or none. We're going to skip winter months, December, January, February, March. And then we're going to do a contact payment during those months. And I'll get into why we do that or why that's common in the industry. So let me go ahead and we're going to pull up TValue Online here and we'll move to the next example. And we're going to enter in the buy rate of 5%. And we're going to do our equipment cost for April 1st, 50,000. And we're going to do 1. So it's always 1 for the equipment cost. And then we're going to go ahead and type in the commission, the same date again. And there's no way to enter in the points. So if it were 3 points, it would be $1,500. If it were 2 points, it would be 1,000. In this case, it's 4 points. 4% is 50,000 is a dollar amount. It's $2,000. Okay. And then we're going to go ahead and enter in our lease payments. This time we're only doing 1 in advance. So we do need to watch the date here. When do they start? They start April 1. And when calculating the payment, we want to put U for unknown. And 5 years is 60 months. Again, could be 36, 48, 72, whatever the term is there. Okay. Now we want to enter in the seasonal payment. So if you have a unique payment structure in TValue, we have a feature called Special Series. It usually shows up on the toolbar. If you're out of space, it's going to show up in the More section. So you click on More, select Special Series. There are a lot of different things here. The only ones you would potentially use in the equipment finance space would be maybe amount step. We're not going to get into that today. Percent step, if you want to step up by percent. And then monthly skip, which can be used quite often if you're in the seasonal business. So we'll want to use this one. Can also be used for forbearance or a COVID situation too. We'll touch on that maybe afterwards. We'll probably have that in our Q&A. So in our monthly skip, we want to make sure we check the box up at the top. If we do not check this box, this feature will not be turned on. So if you go back and do the calculation and it doesn't look right, you need to come back here and make sure that this checkbox is checked. The regular amount, we don't know what the amount is. We're going to solve for that. And then let's just go ahead and check the months we're going to skip. We're doing January, February, March, and December. So kind of the winter months. And we could have them do 0 payments, but a lot of the funding sources don't like when they are not getting payments. So this is where our terminology of contact payments comes in. And in this case, we're just going to do a contact payment. I just picked a random number of $500. Okay, we're going to solve for the regular payment amount, $1,209. So now you're going, Greg, what happened? The payments are $1,209. Where's the $500 payments? It's not displayed there. It says right here on the screen, it says 60 payments of $1,209. But the special series over to the right, it says monthly skip. And it's going to be reflected only on the amortization schedule. So it won't show up here. So you got to go to the schedule. Here's your cash flows. So you got your equipment cost, your commission, our payment amount that we solved for, $1,209.96. We're going to move down this column. December, $500 contact payment. January, $500 contact payment. Same in February, same in March. Scroll down to the next year. Same thing happened. Year 3, next one. Same thing. Year 4, year 5. Okay. So those were your contact payments on your skipped months. If you were skipping them entirely, we would have left it as 0 and resolved for the payments, which would have gave us a different calculation. I'm going to go ahead and show that real quick because that's a good thing to show. So we'll click on monthly skip. If we were going to skip entirely and not have a contact payment, we would just have 0 here, and that becomes unknown. So this is kind of the power of T-value and how you can play around with it. We're going to calculate the new payment amount. It's going to be higher. 1453, we'll look at the schedule. Now you have 1453 as your payment, and they're skipping the winter months for no months at all, for no payments at all, excuse me. Okay, so that one gets a little more complex when you have the skip payments, especially when we're throwing in residual in there and contacts in there. You're getting a few more variables than a vanilla deal, which is the power of T-value. It's kind of why we're around. So the next one, we'll go ahead and move to our next example. And we're going to calculate our payments with a security deposit. We're going to keep the same structure with the same number. So we're going to use our buy rate of 5%. Equipment cost the same at 50 points, 4 points. So 4% of 50,000 is 2,000. We'll enter that in as our commission. Security deposit. Everyone, I just picked a random dollar amount for the security deposit. So whatever that deposit amount would be is the number you would use, okay? I don't know what is the industry standard out there or what percentage is common for certain industries. So for this example, I just chose a nice round number of $1,000, which is 1%, or excuse me, 0.5% of 50,000, right? We have our upfront payments. And then we have a 5-year term, a residual. We got to refund the deposit, right? If we take a deposit, we got to refund the deposit. So if the security deposit was $500, then the refund deposit will be $500. And we'll go ahead and demonstrate that in our example here. So we'll jump over to the program, file new. And we have monthly as our compounding, and our buy rate again is 5%. And then our equipment cost, we're going to start that on April 1st and 50,000. Numbers 1, and then T-value defaults to lease payment. So you want to click on that drop down, put in your commission first. Always make line 2 your commission. Another great takeaway for today. Always make line 2 your commission. It will save you a lot of headaches in having to maybe delete cash flows and redoing them. So we want kind of whatever the funding amount is on line 1, your commission on line 2, then the payments. So don't do payments and then commission, okay? Commission first, then the payment structure. write that one down for all of you, even you longtime users. Commission should be line 2. Same date always. We're using the same points, 2,000. And then we're going to go ahead and we're going to ask ourselves, what happens next? And in this deal, there's a security deposit. So day one, they're going to fund. I'm going to put my commission in, but there's also a security deposit. So we're going to select that in the drop down. When are they going to put down the security deposit? At the beginning, we got to have that money. So it's going to be April 1. Whatever the deposit amount is, could be 500, whatever the dollar amount is. In this example, we chose 1,000. And then now what happens next? We have our lease payments. Are they in advance or arrears? This example, they're in advance. So right now, TValue defaults in arrears. You can see it's 1 month later. So defaulted to 1 month later. We want to back up that date. So it's the same date, April 1. And then we're going to represent our 2 payments in advance in the amount field by doing 2x. We're going to only have 1, so don't put 2 here. Sometimes someone might put U in the amount and 2. Matter of fact, what we don't want to do is we don't want to put U and 2. Because if we do that, that means we don't have 2 payments in advance because the second payment's happening in May. Okay, so this is a great little tip here. Payments in advance, do not make this mistake. Or oops, wait, technical difficulties. Somehow that kicked me out. So let me log back in here. Here we are. And we'll pick up right where we left off here. So with the 2 payments, you don't want to put 2 in the number because that's telling you 2 monthly payments. So we want to leave that as 1, and we want to calculate the 2 in advance by representing that 2x. Okay. And then we'll hit enter. What happens next? Our payments start the following month in May. We're going to solve for the payment. So we put U for unknown. The term is 5 years or 60 months. We do not put 60 because we have 58 remaining. So we put 58 in the number. Okay. Now what happens? Security deposit, refund the deposit? No, not yet. Residual. We have a residual on this one. So we're going to select residual. When's the residual due? The same date as that final payment. So we're going to change the date to February 1. Make sure you get these dates right or the numbers will calculate differently. So timing of the cash flow is extremely important. Then we're going to go ahead, 10% of the residual. There's no way to enter that in TValue. 10% of 50,000 is 5,000. So we enter that in as a dollar amount. Okay. No way to put percentages in TValue. It's all cash flows and dollar values. Number is 1. What happens? We got to refund the deposit. So change it from a payment to refund deposit. We don't do it in March. We do it the last month when everything's closing out. So we're going to do it February 1. And the security deposit up at the top was 1,000. So we're going to refund 1,000. And we're going to calculate our payments. And if you look at the payment amount, we get $895.71, and our 2x with first and last up front is represented by $1791.42. That's double the payment. Click on our schedule, and we have a few more columns this time. So this is a pretty complicated calculation. Lots of moving parts. Equipment cost, commission, refund deposit, we won't scroll down, but it's down there. Lease payment, security deposit happening up front. Our residual reflected down at the bottom. And then we have our interest and principal breakdowns and the balance declining. If we scroll all the way down to the bottom, we kind of have some grand totals. I don't see the headers, but let's see how good I can do. We've got the equipment cost of 50,000. The 2,000 was your commission. The 1,000 was the refund of the deposit. The 53,742 is your total of payments. Your 1,000 was your security deposit. The 5,000 was your residual. The total interest paid, and then you have your principal there. Okay. Okay, so these are examples for today. One other great useful tool on our website are our webinars. We do offer some webinars. If you go to support and resources and over to the left, click on webinars. Several webinars, you want to kind of come down right here. It starts up at upcoming. So these are new ones that are scheduled. You want to go down to our archived section where it says archive. And you're going to click on the TValue Online product. These are our archived TValue Online webinars. So the ones you're going to be looking at are these. We have two. I think we have a basic one here and then an advanced one. And we actually touched on both today. We did examples of both. So these would be great resources for you to use. So if we went a little too fast or you want to practice or see it in action, this is a great place and great resource for you to go. Really, one other thing in the product, we also offer our training videos. So if you go ahead and click on, let me click on sign in up at the top. And go ahead. So if you sign in to the product, give you one moment here. And how do you get to the training videos? You click on account, and we don't need to save this calculation. We have a blank screen here, and then our training video is up in the top left. So we can click on that. They're broken down into different industries. So we have some webinars in here. If you scroll, I scrolled too fast here. Let me scroll up a little bit. There's a webinar section. So we have mastering time value of money calculations and then our deal structuring. So we kind of represented that with lease or leasing. So once you're logged in, you can also access the webinars from here. So if you don't want to go to our company website, they're available to you right here in the product. If you scroll down a little bit, we have a nice little leasing section. I wouldn't use the loan section. I would use the lease section. And this is kind of going to be your area. Look, if you look at the videos over to the right, they're 2 minutes long, 3 minutes long. They're really quick down and dirties to kind of get you to understand the concepts and how to enter things in and calculate those unknown payments that we did today and enter in your commissions.
So with that, I guess we'll wrap it up. Just a reminder again that TValue offers the 40% off for the first year of the TValue Online for our members. And I want to thank you so much for being with us today. This concludes our webinar. Thank you all for participating. This webinar will be posted on the members only section of the AACFB website if you'd like to go back and review it at any time in the future. Again, thank you for attending and have a great day.
Thank you.